Hello traders and welcome to another video. So in this video we are going to talk about weekly backtesting exercise. So another exercise that we like to do in our community, and again it should be done weekly. Okay, so there are exercises that we want to do daily, as if you're a beginner and you're just starting out with the strategy, you should focus on backtesting every single day, naked charting, doing your forecasting every day, journaling. Again, it can be done, daily, can be done weekly. ASR as well, you can do it once a week. And weekly backtesting exercise is going to be done weekly, on a weekly basis. So what you want to do, guys, is just basically backtest previous week. So you're trading from Monday to Friday, and then on the weekend, Saturday, Sunday, you're just gonna go through the price action, bar replay, and backtest the previous week. So what that is going to do to you guys, it's basically you're going to backtest live. So every little thing that happens in a market, the market changes, market behavior, maybe new patterns, everything is going to be recognized. Okay, so you're basically going to follow the data live. Okay, basically. So every week you're gonna update yourself with weekly backtesting, and also at the same time, basically it's two exercises combined into one exercise. So you are backtesting and also you're journaling. So let's say maybe you have missed the trade. When you do your weekly backtesting, you're gonna analyze that trade that you have missed, and you're gonna find the reason why that happened. Maybe you haven't done your forecast, or maybe you were out working, or maybe you have a class, you couldn't take the entry, or maybe you were in a flight and you didn't have internet or something like that. So, or maybe you made a emotional mistake or whatever. But again, you are going to do basically two exercises combined into one. You're gonna backtest and you're gonna do journal. So you're gonna journal the trades. So why do we backtest? Weekly backtest is basically, like, guys, to see everything that happened and see if there are any room for improvements in our trading. So let's say, for example, you have traded the week and you have finished the week on break even, or you have finished the week in minus 2% loss. But right now, when you go to the chart and you bar replay the chart, you see that actually you have plus 10% win rate. So 10%, you had two trades that you didn't took, and you took one that, brought, let's say minus 1%, but you actually had three trades, and, all three trades together have brought you 10%. What that's gonna do to you is that you are going to see that actually there is improvement that needs to be done by your side. So you're gonna see that actually you have finished the week on minus 1%, but if you have done everything correctly, you would be up plus 10%. So you're gonna automatically know that there are things that need to be changed in your trading, and you are going to spot them here. You're gonna basically review them, and you're gonna make sure to never make those mistakes, and you're gonna make sure to improve that. So this is why, again, the exercises are really, really powerful, guys. So basically we're gonna go through every pair. So all the 6 pairs that we are trading, you're going when the week finishes in Friday, Saturday, Sunday, when you have free time, you're just gonna bar replay every little thing on the chart, and you're gonna break down every single entry. Okay, so you're gonna start from the market open. As I have marked here, you're gonna see that this was Sunday market open, and this was Friday close, and then here we have beginning of the Sunday again. So basically, we're gonna take the price action of the previous week, and you're gonna bar replay it and test it out to see if there are any improvements that you need to be making, or if there are any mistakes that you have made, and you can review it and make sure to never repeat those mistakes again. So again, really powerful exercise that you guys need to be doing on a weekly basis. So basically 2 exercises combined with 1, backtesting and backtesting and at the same time journaling. So let's start with I found interesting price action here that we had a lot of trades in one single week. So yeah, it's AUD/USD. So this was market open. Here was Sunday. So on Sunday you would usually do your weekly forecast. You would be preparing for the market open, and you're seeing this chart, and what were you forecasting right now here? So you would forecast the price action was going. Again, when you're forecasting, first thing that you actually are asking yourself what price action is doing. So price action is moving in this ascending price action. We saw that we have this demand flip. We have this momentum, retrace momentum pattern. So basically continuation pattern. So price has made a flip. Supply has failed, demand has failed, and new supply was created. So you would mark your inside bar right here, guys, and you would already forecast that you want to see a corrective pullback coming back to this order block in order for you to execute the trade. So this is basically your Sunday market preparations for the week ahead. And you would already forecast this trade. You would already, know what you want to see in order to get involved in a trade. So let's click through the price. Let's see what happened. Price came back, as you guys can see, correctively, and we would enter this trade. So let's see, pop like this. So again, we were seeing the price action is moving in ascending price action. We have demand flip, supply and control. We see also this retail head and shoulders. So that's another, positive confluence. We saw this nice continuation, impulse, correction, impulse, imbalance left behind. Break of structure was quite impulsive. We have this momentum, no retraces in momentum, no weakness when price action closed here. Also have a corrective pullback coming back slowly to this order block, so you know that you have all good confluences in order to execute this trade. And as you guys can see, price melted down. We saw a little bit of range. And here is where we broke the low. So as we broke the low, we would manage our position, and it would be around 3.5% locked in profits. Let's say right now you have missed the trade and you're doing your weekly backtest, and you saw that you have, let's say, finished the week on break even or a little bit minus, and then you saw this trade that you didn't saw. And then you're gonna ask yourself, why I didn't saw this trade? Why I didn't took this trade? What happened? And then you're gonna review it when you're doing your weekly backtesting. And then you're gonna look at this bit of price action and you're gonna see, maybe I have not done my Sunday forecast. I was not prepared for the market open, or this trade happened in night when I was sleeping, because for me this was Asia session. Market opens at 11 o'clock to me at night and Sunday, so this was basically something like 5 in the morning, maybe something like that, or maybe a little bit later. Early in the morning, maybe you felt asleep, you were still sleeping, you didn't woke up for the trades to take it, but you're gonna spot that. You're gonna review it, and you're gonna write down what happened, why you haven't entered this trade. Or maybe there were other bad confluences that you saw that you didn't want to take the trade, or you didn't forecast in advance, or you felt fear of the trade because you were at -5% on your account, and you were feeling a little bit scared of executing. But you're gonna break it down and you're gonna find the reason why that happened. It's actually really, really important, because again, guys, on those things we are improving. When we review those things, when we review our mistakes and make sure that we do not repeat them ever again. Okay, so you would have the trade, you would do your weekly backtesting, and you will find the reason why you have not executed this trade, or what can you do better, to make sure that next time, actually you do things better. So basically, you're just reviewing the week, breaking down the week, and doing all those things that matter. Right now, I have choose this bit of price action, and I cannot look at lower time frames. But when you're doing your weekly backtesting, you also want to look at lower time frames. So if you want to trade them, of course. If you do not want to trade them, that's perfectly fine. You're going to trade only 1 hour time frame. But if you actually want to trade in lower time frames, you would also look at if something happened in this area here, in this point of interest. So if you're trading lower time frames, you would not execute it here. You would not have a limit order right here. You would not execute it on 1 hour, but you would look at lower time frame setups. So you're gonna go on lower time frame, 1 minute, and you're just gonna see if you had an entry here. So this way you actually review also what happened in 1 minute time frame. So I choose this price action, so I cannot, TradingView is not allowing me to see the 1 minute chart more than 2 months. So yeah, I'm not able to do that. But when you do your weekly backtesting, you are going to break down 1 minute as well. If you are trading 1 minute, if you want to trade 1 minute, you can review them 1 minute also, and basically see if you had an entry here or not. So let's see what happened next. Price action came back, and we had a scaling opportunity here. So this would be a scaling, and this would be a -1%. So we would finish this on 3.4 plus 3.4%, and this would be a -1%, guys. -1%. And this is it. You know that you had 2 trades. So you had 2 trades. One has brought you 3.4%, one -1%. Your total profits would be 2.4%. So again, guys, maybe you have taken only this trade. Maybe you have looked at the position, and let's say this happened at night. Let's say you have not done your evening forecast on Sunday. You forgot to do it, or I don't know, you wanted to sleep, you wanted to go to sleep, or you were tired, and you have not done your weekly preparation, you have not done your weekly forecast, and you have not prepared yourself for the night. And let's say you didn't walk at night, and this happened at night, and you missed your entry. And then let's say you woke up in the morning and you saw that the trade was going for like 6, almost 7%, and you're not in a position. So right now you woke up in the morning and you see that you had an entry, but you missed it. And then you start thinking, oh my God, why do I do this to myself? Oh, I should have done my weekly forecast. I should prepare for the night. I should set an alarm, to wake me up to take these trades. And then you start to break down the trade and you see, wow, all those positive confluences that I had. This trade was actually in my trade plan. Why do I do always this to myself? The things that we are, talking with ourselves when we make a mistake like this. And then all of a sudden you're going to feel fear of missing out, because right now price broke the low, you would be locked in profits, and you would look at this trade. And you would see another impulse, retrace, impulse. And you would see this as your new entry point. And because right now you feel basically fear of missing out because you have missed this trade, you were not taking that trade, you would think to enter this trade. And basically, guys, we had this impulse, it was nice. We had this retrace, it was also nice. And we had this continuation. So this bit of price action was looking beautiful. Impulse, correction, impulse, it was really, really nice. But what was the negative confluence about this trade? The trade came back aggressively. So we were going against momentum. So, in other words, for scaling, this position is of course no brainer. You're always, you're locked in profits 3.5% almost. Of course you're gonna take a scaling. It's you even don't look at the price action, just looking at the math behind it. You already know what you're looking at when you're focusing on scaling in the position. But let's say if you didn't took a scaling, this would be your entry, only an entry. So maybe you would not take the entry because it came back aggressively. But right now, because you have thought about, you have missed the trade and you haven't done your forecast in the Sunday evening, you were sleeping when this happened, all of those emotions are gonna play with you, and maybe you're gonna go against momentum. You're gonna execute a trade that is not in your trade plan. Maybe you do not trade aggressive trades, aggressive continuation trades on AUD USD. Maybe they're not in your trade plan, but because you felt fear of missing out, you have actually executed this trade and it brought you minus 1%. Just imagine you at that point. You're gonna get nervous, you're gonna feel terrible, you're gonna be like, why this always happens to me? It's always the market, it always punishes me like this, why this always happens to me? And those are the emotions and feelings and thoughts that you have when you're trading live. And this is why weekly backtesting exercise allows us to break down everything that happened, but with no emotions, because we're just breaking down the price action from the previous week. And you're gonna spot those things. So you're gonna see, okay, this was my initial mistake. I haven't done my forecast. I was not prepared for this trade, and then later on I have executed a trade that was not in my trade plan because I felt fear of missing out. Okay, let me write it down. So you're gonna use this and you're gonna write everything down. What happened? Where did you make a mistake? How can you improve on that mistake? What emotions have you felt when you were executing the trade? What happened here from the technical point? What happened from your emotional point? You're gonna write every little detail down. So every single detail, you're gonna write it down and you're gonna spot those things. So this is why I'm telling you guys, it's really, really important exercise, because basically you're following the market live. So if every new changes happen, you can spot that live. So let's say maybe, as I told you, market is consistently evolving, market is consistently changing. So we always need to adjust our trading accordingly. Maybe we're gonna see a new pattern. You'd never know, With weekly backtesting, we're gonna see those patterns repeat. So you're gonna see first week, this bit of price action, look at this trade. I didn't took it. It was not in my trade plan, boom, but it go like 10%. Then boom, next week, the same thing. Third week, the same thing. And you're gonna, this pattern is repeating right now 3 times in a row. Let's see if I can backtest it. Let's see if we had it earlier or it's something new. Let's see how can we take advantage of it. So you're always gonna be updated on live data, and also you're gonna do your weekly journal. It's really, really important to do your weekly journal, guys, as you know, because you do not want to repeat one mistake over and over and over again, and you need to improve. And this is how you're gonna improve. So you're gonna have all the details in your charts. You're just gonna backtest the week with no emotions. There are no emotions present when you're doing that. You're just relaxing and seeing what can be improved in your trading. And this is why this exercise is really, really important. So let's see what happened next. Price broke above, so we can expect the price to continue to the upside. We had this inside bar trade as well. Sorry, we didn't. This was double confirmation entry, so I'm not going to talk about double confirmation entry. Let's ignore it. So price is continuing to break to the downside. We have creation of these new lower lows. Price action is showing us this bearish structure, but you already know how AUD USD moves. So you already know the pair, so it likes to do impulse to downside and then pullback, like here, impulse downside, pullback, and then creation of new lower low, and then a pullback, and then creation of new lower low, and then a pullback, and you creation of new lower low. So you can profit here on this pullback, and you can profit here on this reversal. So what is happening right now, you're forecasting your trade, and you see that price action is breaking above. It shows us weakness to the downside, and it's breaking above with this nice momentum, so we can forecast reversal trades. And this inset bar is where we would get involved in a trade. We do not mark the wicks of the candle because this is inset bar refinement. So let's see what happens. Price came back a little bit more aggressively, but for me it's perfectly fine because this is AUD USD, and I trade sometimes I do trade reversal entries like this a little bit more aggressively. Also I know the pair characteristics of the pair, so usually after the creation of new lower low you're gonna see the pullback. So after the creation of new lower low you see a pullback, then we're breaking the low. After the creation of new lower low you'll see a pullback, and then after we break the low. So right here also, because we didn't have enough momentum when we made this low, so we didn't have quite a pullback to here, you know, I can expect the price right now to have a little bit more of pullback to maybe take this liquidity and fill this imbalance that we have a little bit here, or something like that. But I can expect a bigger pullback right now, and then I can expect again another creation of the new low, because again I know characteristics of the pair and I know how AUD USD likes to move. So you're gonna see that the price just barely took us out of the trade and ranged a little bit and broke the high, so we would manage our position 1.2%. Let's see what happened. And this is where the week closed. So if you're trading on a live account, on FTM account, you would close it like for 5 point something percent. Or if if you're trading on a challenge, maybe you would leave it. But I personally do not like to leave trades running and open on the weekend because of gaps and everything like that. So you can do it again on the challenge notification. It's allowed to you. I'm only speaking about FTMO. So on my Forex funds, I think even if you're trading live, you can leave your positions open and running on the weekends. They don't have rules about that. You can also trade news, I think, but I don't trade with my Forex funds. I trade with FTMO, and on FTMO, as FTMO trader, you're not allowed to leave your positions open on the weekend. So you need to close it before market closes. So if you're trading on a funded account and if your revelation process, challenge or vacation, it's allowed. You can trade during news, you can trade, you can leave your positions open on the weekend and everything like that. But yeah, basically we're gonna do that. This is where weekend started. So basically we're just gonna review every little thing that happened on the previous week. So you're gonna review the technical aspects, your maybe trades, if you have taken the trades, or why did you miss the trade, what happened, why have you not executed this trade, and why have you executed this, and maybe you didn't execute this, and then later on you got angry because price action continued to the upside. You're gonna have also live data, and you're basically going to improve yourself, and you're gonna review your trades. You're gonna not repeat the same mistakes over and over again, because you're basically going to journal them with this exercise. And guys, endless advantages come from weekly backtesting. Again, also when you're weekly backtesting, you're going to review the 1 minute time frame. So maybe here you had a 1 minute time frame entry, and maybe when we are executing 1 minute time frame, we are I don't know, let's say for 70% of the time we are just closing our trade on break even. So maybe if this was if there was a lower time frame execution, but I doubt, because the pullback was quite aggressive. But let's say if there was a 1 minute entry and you managed we managed to break the low, and we managed our trade on break even, this would not be a -1%. Maybe this would be a break even trade. So you would not take a stop loss, you would finish on break even. Or maybe here, if you have lower time frame execution, maybe this would not bring you 5%, this would maybe bring you 20% if you had a lower time frame execution. So this is why you should also look at lower time frames entries if you had anything interesting happening on lower time frames. So basically, guys, that's it. You're just reviewing the charts, you're just marking everything, and again, when next week goes, have a separate layout in your trading view for this exercise. So it's a separate layout called weekly backtesting exercise, and then you just trade normally live the next week, and then when the week is finished and there's a Friday close on the weekend, when you find time, you're just breaking down the whole price action of the previous week, and you just update yourself, and you're gonna see later. You can review all those trades. You do not need to do backtesting, again, because you're gonna do everything live. It's gonna pass 2-3 months, and you're gonna just scroll the data, and you're gonna have everything. It's gonna be basically your backtest, and at the same time, it's gonna be your journal. So really, really important thing that it's gonna really boost your performance as traders. Okay, guys. So that's basically it about this video. Hope you liked it, hope you enjoyed it. If you have any questions, just DM me or send a message in the community, and we're gonna be more than happy to reply. So yeah, that's it for this video. See you in the next one.